Hello, my friends. It's Robert Miner with Dynamic Traders Group with a short video for our Twitter followers and YouTube followers and subscribers. I'm going to go over one of your favorite markets, one of my favorite markets today, and that's the gold market. I'm going to update it. Boy, we had an incredible week this past week, especially on Friday, that big up day, up over 50 bucks on Friday. Well, I hope you were prepared for that. If you watched my video from 2 weeks ago for gold and the S&P, you should have been prepared for what's happened in the last couple of weeks in both gold and the S&P. Our DT Trader Alert subscribers have been long gold since the day after the low, since October 9th. But it's not too late. That's what this is all about, is you don't have to pick the bottom. You don't have to sell the top. You just have to recognize when a reversal has been made, or at least a high probability position that it's been made. That's what we'll talk about today, as well as second chance for gold, because this may just be the start of a very significant advance. Okay, let's get started. And not only are we going to describe what is the probable position of gold, but this is educational. You need to learn from this, so from what you learn, you can apply to other markets and other time frames. Okay, here we go. Let's take a look at gold. Well, this is the December contract of weekly gold, and let's take a look at what are the key factors here as of the end of this past week. Number one, I'm going to start at the bottom here. The weekly momentum cycle made a bull reversal. No surprise given what the up week was this past week, over $100 advance last week, almost all of that in the last day of the week on Friday. But this is what we were expecting over the last couple of weeks, is that gold was in a position to make a weekly low. And so the bear reversal confirms that a weekly low is complete. Let's move on up. If you saw our video from 2 weeks ago, feel free to go back and take a look at that. You knew that the week ending October 6th or the week ending the 13th, that's the last 2 weeks, were the time targets to complete a weekly low. That was important. The low so far was indeed the week ending October 6th. And we knew that this decline should be a correction, and when the correction is complete, a higher time frame bull trend should continue. Well, what's a signal that the correction is complete? Well, I call it a closing overlap. I think I'm the only person that teaches this, and under what circumstances it's important. Well, it's important this past week. Now, this is weekly data, and this weekly advance and the close above the weekly closing low that was made back in August. It's a weekly closing overlap. And what it tells us, that because this pattern of this decline is corrective and not impulsive, it tells us that as of 2 weeks ago, gold is in a position to have completed this corrective decline. Now that's significant, because what follows a correction? Well, a resumption of the trend prior to the correction to a new extreme. That means if indeed this has completed a correction at some point, eventually gold should continue to advance to well above the May high. We'll get into that in a little bit more in a minute. But that alone is some real significant information. That, in other words, even though we had this huge advances last week, it's just the beginning of a much higher time frame bull trend. So what's the confirmation that that correction is complete? That'll be a weekly close above 1967.10, not too far above the market. Again, it makes that weekly close above that, and we're still just in the initial stages, more than likely at least, of a higher time frame bull trend. So just on this weekly data, again, from the video from 2 weeks ago, you should have been prepared for what happened. But we're just in the initial stages. You're not missing out on anything yet. You've got lots of opportunities to participate in this potential bull trend. Now, this is the December contract, the daily data, and the daily momentums are reaching overbought. And that means that we're probably a day or two or so away from completing a daily high. And that daily high should just be a temporary high. It should be followed by a correction lasting several days. And that's going to be our next opportunity to position on the long side for continuation of this trend. Now, W.D. Gann called that the safest entry point. on the initial reaction to a new trend. So we have to define what can be a new trend, and we've defined that probably we're just in the initial stages of a much higher time frame bull trend. So the initial correction in Elliott Wave terms would be a wave 2 or a wave B correction. And that's what we're looking to identify over the next few days. Again, we're just in the initial stages of a bull trend, more than likely at least. So that's what we're going to be looking for. And one of the ways we look for that, we can look for price and time corrections. We can look for, in the days ahead, a daily momentum cycle and then a bull reversal. That'll put the daily momentums back in sync with the weekly bullish momentum. Lots of opportunities coming up. Before we take a look at a couple other charts, I want to bring this to your attention, is that on Monday the 9th, is that gold gapped up from over the weekend, gapped up on the open over the weekend. Now, there's a lot of people, amateurs and people that don't actually trade successfully, that see a gap like that and they think, oh, I got to wait for the gap to be filled. Well, you may be waiting a long time. Gaps aren't always filled. And besides that, a gap opening in the direction that you're anticipating the trend should be, that's a powerful confirmation that indeed that trend has reversed, and in this case, it's a bullish impulse trend. And so don't wait for a gap to be filled. That's stupid. That's amateur stuff. Is take advantage of the technical position of a probable reversal having been made and just adjust your position size to the capital exposure, meaning where the stop needs to be, which would be right below this low. And you don't have to use highly leveraged markets. You can use an ETF like GLD, and you don't have to use or get a lot of shares. You can define what your capital exposure is before you even enter the market. Then you use that to adjust how many shares you get, and take advantage. Don't be foolish. Don't wait for that ideal setup for gaps to be filled or 50% retracement. Man, when that reversal is made, and everything's in place to have made that reversal, get in the market. Don't dilly-dally. Okay, let me show you just a couple things before we can continue, or before we wrap this up. This is the gold monthly chart. I want to review this with you for a minute. Why it's important and why we've been looking to identify a correction and when that correction is complete. This is the monthly chart going back to the 2015 low. The key thing I want to show you here, remind you of, is this triple top from this is the August 2020 high, this is the March 2022 high, and this is the May 2023 high. If indeed gold is completing a correction, and if indeed it continues to a new extreme, which is what happens when a correction is complete, then a breakout above this triple top could be fairly dramatic. Now, I don't want to forecast what's going to happen, and don't have to do that. The only thing we have to do is recognize when the market, in this case gold, is in a position to complete a correction. Whatever happens after that, well, it happens, but we want to participate in the event that it does continue to above this high. So right now, if you're not already long, once again, that trade strategy over probably just the next few days, I suspect the next trade setup will be complete by the end of this next week. Let me go back to where we're at here. Is that when that next trade setup is made, is it give us another opportunity to get on the long side in the event that that bull trend does continue and takes out that triple top. So really be on the alert by the middle to the end of next week. Might even go into the following week, but there will be another really good opportunity to position on the long side. And if you're interested in keeping up on our approach to the technical analysis and trade strategies, check out our DT reports at dynamictraders.com. We update all these markets 3 times a week. So I think it'll be valuable for you. Well, that's it for today, my friends. If you want to be updated on gold, the S&P, and all the major financial markets 3 times a week, check out our DT reports at dynamictraders.com. Also, you can sign up for absolutely free for our DT Traders News, where we put updates usually a couple times a week, more frequently than we do these YouTube videos. So you can sign up for that. There's no cost. We don't need any charge card. Just need your email address so that we can let you know when a new update is posted. So that's it for today. Everybody take care. Robert Miner, over and out for now.